I think pension funds have a critical role to play in the economic growth of any society. Often looking very in the beginning at what they're doing locally, but also globally. I think investment funds, whether they're in New York or Sydney or Beijing or Amsterdam, have a vested interest in how the investment opportunities develop here in Africa. But perhaps more to the point of your summit is, what are pension funds in Nairobi or Port Louis or Durban or Windhoek or Accra, what are pension funds based in those cities doing about investing in Africa? The data is showing us today that even where pension funds have an allocation at a policy level to Africa, they're really not taking it up. What's surprising is even the large retirement funds in South Africa, which have a fairly sophisticated view of African investment opportunities, even the mega funds are not reaching their 5% allocation into Africa, whatever the asset class or whatever the sector that you would look at, even if it's, say, infrastructure or fixed income sovereign bonds. There's not enough take-up at the Africa allocation level by pension funds in the largest investment market in Africa, in South Africa, which is the first place where you'd look. But what's perhaps surprising to practitioners too, even where you're looking for the diversification benefits at a geographic level, you can find the same data in Namibia or Zambia or Ghana or Kenya, where there is the allocation that's permitted in terms of treasury regulations or foreign currency regulations, pension fund investment regulations, but the pension funds are just not making those investment strategy decisions. I think that's a major issue and something I really hope to see change over time, where we have more data on what are some of the rules of the game, pension fund by pension fund, country by country, and we also see the pension fund trustees and their advisors being more clear about, well, what are the barriers that you see to investing in Africa, and maybe reducing in their minds some of those barriers, or indeed where there are technical barriers about trading, about the availability of investment advice or investment products or investment reporting, that some of those technical barriers may be reduced over time. I think pension funds in Africa have a great opportunity, and really the ball's in their court in terms of making investment decisions for their members, for their beneficiaries, and for the people of Africa that help grow these economies. Because I think the pension funds can and really should be cornerstone investors in every African economy. Well, the decisions by pension funds on where to invest their money is often guided partly by the investment providers. So what their asset consultants might be telling them, what their investment advisors. Another large area of information, I think, comes from the trustees themselves. Often people think of a pension fund trustee board as an institutional block. That's not my experience. I've been in the retirement fund investment industry for 20 years now. And my experience is that trustees, especially the body of trustees together, they're made up of a diversity of opinions, especially perhaps where they represent different constituencies, perhaps a member constituency, an employer constituency. So the board of trustees themselves may have a variety of viewpoints and also a variety of impressions about, is Africa a scary place to invest in, or what parts of Africa are less scary than others, or what some of those opportunities are. So the first way I would think about where some of those opportunities and where people find the opportunities is going to be based on what do they know, what conversations do they have, what information are they finding, what do they read. Another key piece is, well, what are the portfolios that are available to them, what are the opportunities? My first choice when it comes to pension fund investing is less about listed securities. It's less about listed equities or fixed income. My greater interest in pension fund investment in Africa is around infrastructure and private equity, which I see as longer term investment plays, 5 years, 12 years perhaps in an LP. Or an infrastructure deal, look, if you're building a port, it's a 50-year decision. The NAM port, for example, in Namibia, that's just coming up, Lekki port in Nigeria, those are 50-year decisions. Now, if you're a pension fund, that's a fantastic match, in my view, with your liability profile and so with your investment horizon. So it'll depend on the information that the pension funds have. Frankly, sometimes it's at a personal level, what their view is of different countries, what their impressions are. But also we have some technical barriers around what are the products that are available to investors, and what is the thinking that is impacting on those investment advisors. I think funds have more opportunities, and we're getting better quality information about what is available and what are some of the gaps in funding or investment opportunities. I would answer the question of what information is available on opportunities firstly by pointing to the Infrastructure 50 project that the African Development Bank has, where this question of how do we invest in Africa's infrastructure gap, identified by the World Bank as around 93 billion, about 80% of that in new infrastructure, the balance in servicing existing infrastructure. And part of the approach that the African Development Bank took was, well, why don't we make this doable for institutional investors by packaging more infrastructure projects together so we can develop some of this pipeline. So I think you'll see more opportunities. Some of the most exciting pieces for me about that are there's also more green projects, if you will. There's no point in investing in 20th century technology in the 21st century in Africa. We're a cell phone generation here in Africa. So how much can we skip to an inclusive and a green economy path? Well, already wherever there's been a green fixed income instrument offering underwritten by the World Bank or the African Development Bank, there's been excellent demand. Basically all the securities are being snapped up. So I think that that's a great avenue for progress. At the level of information being made available, I'm excited about a project that I'll be working on with the African Development Bank and Harvard Law School, where we're trying to answer questions of, well, what is the landscape of pension funds like in Africa? What are the investment strategies? What are the rules of the game? And how are pension funds today in Africa making decisions about where they put their money, how they're tracking it, and how they're reporting back to their beneficiaries and their members and their broader stakeholder base? My view, of course, is always that more information and transparency from pension funds is required, because pension funds are long-term investors. They're very influential in African economies, often dominating ownership at an institutional level, whether it's in South Africa or Zambia or Kenya. Often the major pension funds are the dominant asset owners in a particular country. But more than that, pension funds are tax-preferred investments. So in some way, every taxpayer has a keen interest in how these pension funds are investing. And my view is that they've been reporting that and prevent any kind of corruption or misunderstanding by reporting regularly on what they're doing at an investment level. So I think both in terms of the investment opportunities, I think in terms of improved quality of information, in terms of researching what are the rules of the game for pension funds in Africa, but also importantly bringing it back down to the member or the beneficiary and saying what information is available, are we looking after these members and these beneficiaries, and not only how are we investing, but what is the impact of that investment in Africa. And that's a question I'd like to see addressed by the summit hosted by Bowman Gilfillan is, can we hear from experts, people in the field, practitioners, what are these barriers? Are they known unknowns? Are they unknown unknowns? What are the technical, what are the cultural barriers to investing in Africa by Africa's pension funds? Because if we want to signal, as African investment professionals, that Africa is open for business, we believe that Africa is a vibrant continent with great investment opportunities, well, the most important signal we can send is where are we putting our own money? So I'd like to see African pension fund investment professionals answering the question, why are African pension funds not investing in Africa? And if they are, let's share some of that good news, because that'll signal very strongly to people who are watching in Beijing or Geneva or New York or Sydney that there is investment opportunity in Africa, and African pension funds are leading the way.